Hi, thank you for joining us here at Tax Talk UK, where we talk about all things tax. We've had quite a few questions from landlords, and one that stands out is, can we explain how the tax relief works for your mortgage interest since the recent changes? So we're going to talk about that today and run through an example to illustrate that. And before we talk about that, if I could please ask you to take a moment to subscribe to our YouTube channel. That way you'll easily be able to refer back to this information if you need to, as well as finding other information that we have available on a whole wide range of topics to do with tax and working for yourself, being a landlord, and other aspects of general small business. So on to then mortgage interest. So this is it's quite straightforward once you get your head around it, but there is a little bit of confusion out there. Some people think that they don't get tax relief at all on their mortgage interest. Some people think that if they're a high rate taxpayer, they don't get any relief for it. So we're just going to run through how it actually works. So prior to the changes, you would, on your self-assessment tax return, you would calculate your total income from your rents, and then you would calculate your total expenses for things like professional fees, repairs and maintenance, all the general things, and you would include in that any interest that you had paid on your borrowing for the for your rental property. And then that would leave you with your profit from your rental income, and that would be added to the rest of your income for the tax year and taxed accordingly at whatever the prevailing tax rate was, dependent on your profits and dependent on your other income. So that was quite straightforward. Then what happened was things changed. And now we are required to calculate our profit without reference to the mortgage interest. So again, add up all of your rental income, but now we were only taking off everything else that we would have claimed before except the mortgage interest. So we take off our professional fees, our repairs and maintenance, our insurance, all of those sorts of costs. But at this point, we don't do anything with the mortgage interest. So that then becomes our profit from our rental income, and that is taxed accordingly at the prevailing rate and added to any other income that we may have. And then what happens is we're now allowed tax relief for the mortgage interest, which is restricted to 20%. So therefore, if you are pushed into high rate tax threshold by your rental profits without reference to the interest, then that there's a potential that some of your income will be taxed at 40% tax, and you will only receive the relief at 20%. Now, of course, if you have other employment that uses all your personal allowance and your standard rate allowance, and you're already into the high rate tax, then that means that all of your profits, all of your mortgage, all of your profits will be taxed at 40%, and you will only have mortgage interest relief at 20%. So I'm just going to run through an example. So I'm just going to share my screen. So I've just shown my screen so I can just run through an actual example with figures, because with everything it's much easier to understand once we can actually see some figures and see the workings. So prior to the changes, let's say, for example, you had rental income of £50,000 and expenses, general expenses of £10,000. So the general expenses, repairs and maintenance, insurance, professional fees, all of those things, everything but your mortgage interest. And then you have mortgage interest that you've paid in the year of £10,000. So that will give you a profit of £30,000. And then that will, on your self-assessment tax return, that will be added to your other income and taxed accordingly at the rate that depends on your total income. So now what will happen is we will have the same, so we're looking at the same figures because we're wanting to see how it affects us. So we have the income of the £50,000 and expenses of £10,000. So that gives us profit now of £40,000, and that is going to be taxed accordingly. So if that pushes you into high rate tax threshold, then that element above the threshold will be taxed at 40%. And then you get mortgage interest, you get tax relief on the mortgage interest of 10,000 at 20%, regardless of what you were taxed on your profit. So here you start to see where the how the difference impacts us. So if we now add in some other income, then that will absolutely illustrate how the changes actually impact on our liability. So if you've got no other income, you've got your profit of 40,000. So assuming you're a standard rate taxpayer, your profit will be taxed at 20%. So therefore you'll get the relief at 20%. So the change makes no difference to your liability. So now you can see that if your total income, including your profit from your rental income without reference to the mortgage interest, is below high rate threshold, you won't be affected at all by these changes. You will still pay exactly the same amount of tax that you would have done before. So the difference comes in is where you're either already a high rate taxpayer or your rental income pushes you into high rate tax. So let's say, for example, that you've got £20,000 of other income. So now you can see if we add that 20,000 to the 40,000 that we had as profit prior to taking into account the mortgage interest, now 10,000 of that approximately is going to be high rate tax. And so therefore you're going to pay £4,000 on that £10,000 of profit. And then once we factor in the mortgage interest, you'll get the relief on the £10,000, but that will only be at 20%. So therefore you'll pay tax on the profit at £4,000, but you will only claim £2,000. But as you can see, you still do get some relief. It's just restricted, so it's not correct to say that you don't get any tax relief. But you can see that it is important to keep an eye on where you are in relation to the high rate threshold, because that then becomes an extra cost in effect of your rental. Your rental income. So hopefully this helps to give a little bit more of an understanding of how the mortgage interest relief works, and you can see the implications and have an idea of how to work out what your liability will be. So thank you very much for watching, and as I mentioned previously, please do take a moment to subscribe to our YouTube channel. Thank you. Goodbye.